Let me just ask you how the third quarter played out versus the second quarter. Was it a much better time frame for you?
Hello, good morning, and thank you for having me. Indeed, we've seen some encouraging signs of recovery in the third quarter, which was significantly stronger than the second quarter. We actually booked the highest net interest income of the last 7 quarters this time, and underlying profit for the quarter was in line with the average of last year, which is a very strong environment, a very strong performance in this environment.
So what does it mean for ROTE? If you look at that key metric, you could see in the 9-month period it was extremely low, 3.3%. You could see some of that destruction did come from the second quarter, where you then improved in the third quarter. Where do you go from here on that metric?
Well, we've given some guidance for a recurring profit of around 5 billion for the year. That would put the return on tangible equity around 7%, which obviously, given that this is the worst time in decades, is again a very strong performance.
Jose, good morning to you. Very interesting on the net interest income number. Could you just drill into it a little bit more for us? Because obviously base rates are flat as a pancake, as we know here. How are you managing to achieve that?
Well, we've had some countries with very, very strong performance, especially South America and North America are behaving very, very well. It is true that low interest rates puts pressure on margins, but for many countries, these very low levels of interest rates is allowing new businesses to be developed. And let me use, for instance, mortgages in Brazil as an example. Interest rates in Brazil are at 2%. That's an all-time low for the country, and we are starting to see a mortgage market, which is incipient, but is a new business that is being developed. So that new business, together with the fact that the cost of debt for families and businesses is also very low, is helping volumes.